Hello and welcome to another Software and Internet Monthly Market Report brought to you by Stanford Advisors. November was another busy month, 17.1 billion invested in the month, 113 transactions and 4 times the average revenue multiple. We'll get into a little bit of detail in terms of how those compare to prior months on a couple of later slides. But really driving that dollar volume was a couple of large transactions. Zendesk being bought by Hellman & Friedman for 10.2 billion. That was a 5.6 times revenue multiple. Roper Technologies being acquired for 2.6 billion, and then CSI being acquired for 1.6 billion at a 4.7 times revenue multiple. So several large transactions really driving that M&A volume this month. If we look at like average monthly deal volume, it's a very similar trend to what we've been talking about for pretty much all of this year. So 113 transactions in the month, really that compares relatively consistently with what's happening in 2022, where we've seen, between 105 and 130 transactions on any given month. So, and I don't think that trend's going to really continue. This is what we were seeing pre-COVID, and we've kind of normalized to pre-COVID levels. Definitely much lower than what we saw in 2021, where we were nearing 200 transactions per month. So what does that mean in terms of where we're going to shape up for the whole year? Well, if you annualize where we're going to end the year just for the last month, you get to like 470 billion of transaction volume, which is well in excess of the record that we set in 2021. So in terms of dollars deployed, it's another new record, but a new record by a big margin. On the number of transactions side, that is telling a little bit of a different story in that the number of deals are down. But very encouraging for me is that they've still recovered from pre-COVID levels, where we were like 1,500 transactions for the year of 2019. We're going to be pretty significantly above that, which is I think is good and a good trend as we head into 2023. In terms of valuations, the variability of the valuations has continued to kind of narrow. So we've seen this now for 3 quarters, whereas at the end of 2021 and beginning of 2022, the variability between the 25th percentile and the 75th percentile was extremely wide. That's kind of continued to narrow and come down pretty dramatically. So the 75th percentile for the fourth quarter so far of 2022 is 8.8 times. So and the 25th percentile is 3.3 times. So valuations have definitely come down, and we'll see that again on the next slide. So you can see that here. Valuations are down on average for SaaS companies from 8.6 times median last year to 5 times this year. For non-SaaS, that's gone from 4.4 times to 6 times. So surprisingly enough, the non-SaaS multiples are higher than the SaaS multiples, but in reality, that's probably not the case. This is just publicly available data, but the non-SaaS companies have definitely closed the gap to the SaaS companies in terms of valuations. And a lot of that's the mentality of the buyers believing that they can convert those non-SaaS businesses to SaaS. On the VC side of stuff, a pretty decent month. So 400 transactions, 4.2 billion invested, median deal size very consistent with what we're seeing for all the year at 4.8 million, sorry. Some notable transactions on the larger side: Queen of the Raw raised 400 million, Elation raised 148 million, and Bishop Fox raised 129 million. So several larger transactions, probably not as large or as many large transactions that we've seen in prior months, but still encouraging that there's quite a lot of capital being deployed on the VC side of things. And what does that mean we'll end the year? Well, actually a different trend to on the M&A side. So the number of transactions is going to be up from last year. So the opposite to what was happening on the M&A side. Actually, the dollar volume, while still very high and elevated over 2019 and 2020 levels, it is a slight drop of about 15% from 2021 levels. So it'll be interesting to see where this kind of finishes up. But I think as we head into next year, we're on pace for lower than 100 billion in VC raises, but we'll see where that kind of comes out. And then on the valuation side for the VC things, this actually held up surprisingly well. So if you see those mid transactions, they're at 40 times. So that's elevated over last year. So, that's kind of Series BCDs basically that are coming out at pretty decent values. The late stage deals have kind of flattened off versus last year, so pretty consistent with where we were last year. The only one that really is down, and it's not down that significantly, is the early stage transactions. So the early stage transactions last year were 33 times, and this year is 29 times. So a little bit of a dip, but not as much as you would expect. Anyway, if you want to be signed up for our monthly market report, reach out to any one of us on the team, and we're happy to sign you up. And we'll be talking next month. Thanks very much.